Okay, so let's say we have two methods. Depends on your company. Why depends on your company? Because either way, you use method one or method two. Either way, we have the same result on financial statement. So that's why you use either way, it doesn't affect your company's financial results. So that's why accounting we accept allow you to use either way. So they see either way how to use it. Most of cases, usually nothing for free. So we have the liabilities. Okay. So that's for our first date. So how about after first date, subsequent periods means in the future, next year, next 2 years, next 3 years, how to deal with your government grant. Okay. So we talk about subsequent periods. Okay. For the following periods, how to do that. If your first date you use assets and liabilities, or you use assets and assets. Remember, this is your method one. This is your method two. So what's the following periods we have to do? Okay, so we talk about that. Accounting, we have another very important logic concept is what? Matching principle. It's quite very important logic concept we have for your subsequent periods, usually matching principle. So what does that mean, matching principle? 配合原则，收入费用配合原则。Revenue expenses, they should be reported on the same accounting periods. So your revenue and related expenses should be reported on the same accounting period. Okay? Why? We have this very important logic concept. Revenue and related expenses should be reported on the same accounting period. Because I've mentioned, nothing for free, right? So nothing for free means what? You try to earn revenues. Always, you have to pay some expenses, right? So nothing for free. You try to earn revenues. You always have some related expenses happen, incur at the same time. So like what? You want to have a part-time job. You want to teach, be tutor, teach English to earn the money. Like what? How much? $500 per hour. But nothing for free means what? You have to go to the student's house. Then maybe you have to pay what? Pay the taxi fee, bus fee. So you have to pay some money. So in the end, how much money you earn? Not 500. You have to think about the expenses, bus fee, taxi fee you pay. So in the end, you earn the profit is only maybe 400, maybe 300, right? So we want to know what is your true profit. So what's your true profit? Means what? Your net income, right? Because this is the money you really earned. So that's why always we had to think about matching principle. Revenue and related expenses should be reported on the same periods. Because of this, that's why we had to do depreciation. Because of this, that's why we had to report payday expense. Because of this, that's why we had to, what else? Inventory. We have to report cost of goods sold. even though you are a lazy guy, you use periodic, but in the end, after the whole year, you still have tried to figure out cost of goods sold, your expenses. Okay? So based on this important logic, this how we apply to the subsequent periods. Any questions? So how about your first method, liability? This is the first method. If today your company spend the money to buy the PPE, so what's the amount we use? Remember, when you buy assets, always first issue is to determine our cost, right? So how to determine our cost? 1 plus 2. At the same time, today you got some grant from the government. Okay, so the government decide to support you some money. So you got the cash from the government, but don't forget, you still have to meet some obligations, right? So we use the method 1 to record our liabilities, which is deferred grant revenues, right? So this is our first method. We report our liability increase. Which amount we use? Don't forget. Fair value, because you got the assets outside your company from the market. Okay? So for the following periods, we follow matching principle. So what does it mean? Look at the equipment first. For equipment, what's the following thing we have to do? Each period we have to do depreciation, right? So for our equipment, after you use it every year, we have to record, we have to do depreciation, right? At the same time, record our depreciation expense and accumulated depreciation. Right now, how about your grant? Don't forget, your grant from government want to support your company, right? So we try to make your company better. It means when you have the expenses, we try to meet revenue and expenses at the same time to make your company's financial statements look better. That's the purpose for grant, right? So matching principle, how to record our grant for the subsequent periods. Based on matching principle, you will follow your equipment. Okay, so how you do that? Depreciation, if we use straight line. Okay, so your liabilities, you follow it, try to compensate your expenses. So you will do what? If you remember, liabilities, after you do your job, after you meet the obligations, that means what? Liability decrease, at the same time you earn the revenue, right? Like what? Earn service revenue, the same logic. Earn service revenue, at the beginning, your liability. After you do your job, liability decrease, at the same time you earn your revenues. Okay, and this revenue is about grant, so we call it grant revenue. Okay, so that's what we mean. We use revenue, grant revenue, to compensate your expenses. Okay, so the government, you earn the grant revenues from the government to compensate your expenses. So that's the purpose, right? Government grant to make your company's number better. So after this, you will find out in the end, use grant revenue to compensate your expenses. In the end, they will make your net income improve, increase, right? Okay, so that's from first method. Any questions? Okay, how about second method? Second method is when you don't use liability, you use what? You use equipment. So you should understand this equipment means what? Cost of equipment decrease. Because you got some money from the government. So which make you spend less money to buy your equipment. Okay, so for example, if you spend, for example, 400 to buy your equipment, okay? If you spend 400 to buy your equipment, but at the same time, you got the grant from the government, 100. So could you tell me actually how much money you spend to buy the equipment? You spend 400, but you got the cash from government 100. So actually you just spend 300, right? Spent. So that's right. What's your cost? When you combine these two, the cost only 300. Okay? So did you find out the cost you spent only 300? So your cost decreased 100. Why? Because you got a grant from the government. So your cost decreased $100. Right? 400 to 300. Your cost decreased 100. Why? Because of government grant. So this here means government grant will make your cost decrease. You just spend less money to buy the same equipment. Okay, any questions? No problem. So based on the logic here, then you understand why here equipment cost of equipment decrease 100 because you can spend less money to buy the same equipment. So how about the following periods? For your equipment depreciation, no problem, right? How about this one? Equipment on credit side means decrease, right? So means what? Just opposite situation, right? So still do the depreciation because matching principle told you you have to match your related expenses. But when we do the depreciation, here means what? Depreciation expense decrease, right? Because equipment decrease means depreciation expense decrease. So did you find out upper this side? So upper this side, we still got the same result. What's the same result? Here depreciation expense decrease. We use it to compensate your depreciation expense. Okay? So did you find out in the end, you use decreased depreciation expense to compensate your depreciation expense. In the end, you will get what? Less depreciation expense. Since you have less depreciation expense, means what? Your net income will be higher, better, right? Okay? So did you find out? We got the same result. Either you use method 1 or method 2, we got the same result. Make your net income increase. Okay? So here is the summaries for method 1 and method 2. So did you find out? Method 1, for the following periods, your liability decrease, you earn the revenue, but we use revenue to compensate your expense. So in the end, your net income increase, right? Method 2, depreciation expense decrease. We use it to compensate your depreciation expense. So they concealed each other's. Still, make your net income increase. So we got the same result no matter you use which one. Okay? Any questions? If you don't have any questions, then let's look at the case on page 148. Page 148. So what's the question? The question is, your company got 500,000 government grant. Okay, so 500,000 is the government grant you have to help you what? To buy the equipment. Okay, so the equipment usually cost $2 million, have a useful life 5 years. We use straight line method. So your first one, this is your government grant. You got $500,000. And second sentence is your original money you spent to buy the equipment. So you buy equipment. Okay? So based on this, please use method 1 and method 2 how to record the first day and the subsequent periods. Please look at your note on page. Let me see. 38. So 38 is the question we have. So method 1, when you decide to use deferred grant revenues, this is your method 1. You decide to use liability. Okay, based on this, how to record it on your first date? Okay, you buy the equipment, you got a government grant. Also, for the subsequent periods, and 38. Oh, so please finish 30 or 40 is the second method. 40 is the second method. You decide to record equipment decrease. So that's 40. So please finish 38 to 41. 38 to 41. Two methods. Okay, are you done? So let's look at the first method. So first method, first day, you spend the money $2 million to buy the equipment, right? So your first journal entry is you spend the money cash 2 million to buy the equipment. But don't forget at the same time you got the cash from the government. But we use first method means at the same time liability increase, which is deferred grant revenue. So how about the following periods? For our equipment, the question told you we use straight line, right, for 5 years. So your cost $2 million minus residual value here we assume is zero because the question didn't mention residual value. So we assume it's zero. Straight line for 5 years. So each year $400,000. Okay? So that's right. First year we record we have a depreciation expense, accumulated depreciation for 400,000 years. How about your liability? Don't forget we use matching principle, 配合原则. So what does it mean? We use the same method to allocate our liabilities. So what's the same method? Straight line, straight line. So that's right. Divided by 5 years because matching principle we use same method as our equipment, straight line. So $500,000 divided by 5 years, straight line method. So each year 100,000 years. So you did your job. Your liability decrease at the same time you earn your revenues, grant revenue. Okay, how much? $100,000. Why? Because we match our expenses, matching principle, 配合原则. So we use same method, straight line method. Okay, any questions? So that's right. Equipment, cash. That's when you buy the equipment. We got a government grant from your government. Following periods. So did you find out your grant revenue could compensate your expense? Okay, any questions? And don't forget, also quite important, how we report the numbers on our financial statement. This is the key point, right? Because this is, we know the process, but the most important for you guys is how they showed on your financial statements. So for your statement of comprehensive income, we have what? We have depreciation, $400,000. And your government want to compensate your expense. So we have grant revenue. So did you find out we use grant revenue to compensate your depreciation expense? That's right. Your net income decrease only $300,000. Decrease less than you expect, right? So you decrease less. Decrease how much? $100,000 because you got a grant from the government. So you decrease less. It's not $400,000. It's only $300,000. Okay. How about your PP? Don't forget. Always equipment will report what? Equipment will report cost. So always this number should be your cost. And we use accumulated depreciation to describe your value decrease, right? Here, only 1 year. So that's right. We have only $400,000 only for 1 year right now. Okay? So that's why after 1 year, your book value for PP is only 1.6 million. Any questions? How about your liability? Let's go back here. At the beginning, liability $400,000, right? After 1 year, your liability decreased $100,000. So after this, you have liability only have How many liability? Before 500,000. Right now, decrease 100,000. So you have a liability, only 400,000 liability, right? Okay? Before 500,000 liability. After 1 year, liability decrease 100. So you only have liability $400,000. Okay? So any questions for the number? No? Then you should be very careful. For this $400,000 in the future, you will have liability decrease every year, right? So for example, at the beginning first date, if I have liability $500,000 for the following years, first year, second year, third, fourth, and 5 years, each year your liability will be decreased 100, right? $1,000. Each year $100,000. Each year $100,000. Okay, so could you tell me right now, after 1 year, you are here? Don't forget, you are here after 1 year. So means what? You did your job 1 year, so your liability decreased $100,000. You still have $400,000, but which one you will do your job for the following year? 100, right? So for your first $100,000, this one, you have to do something, have do your obligation within 1 year, right? How about the other? You will do your obligation after 1 year, right? So what does it mean? First one is your current liability, right? Because you have to do it within 1 year. So this is your current liability. The others, more than 1 year, is your non-current liability. Okay? Any questions? So when we report the situations on financial statements, you should be careful, is current or non-current, because you have to tell outsiders the situation. What's the situation? If I'm the outsiders, I'm the financial statement users, I know, okay, current liability. I know your company had to do something within 1 year. Others, non-current liabilities, I know that's for after 1 year. So we use current, non-current to tell users what's going on inside the company. Okay, so we don't just report 400,000 because 400,000 outsiders don't know the situation. That's why we had to tell them, okay, it's within 1 year, it's more than 1 year. Okay, any questions? So that's right. Here, liabilities, current liabilities, $100,000. The others, more than 1 year, we had to report it on non-current liabilities. Okay, so totally, you still have the liabilities, $400,000 liabilities. But you had to do something within 1 year is 100,000. The others after 1 year. Okay, any questions? No problem. So after that, what's your net assets? 资产净额. Remember net, always net means something minus something. So what's that? Assets minus liabilities. So your assets 1.6 million minus your liabilities 400,000. So that's right. Our net assets only 1.2 million. Okay, so how to get your 1.2 million? Is your assets 1.6 million minus total liabilities is what? 400. So you got 1.2 million. Net assets is your true value. Why? You have many assets. You have many liabilities at the same time. So that's not your true value. True value is after liabilities. So how many assets I still have? That's your true value, right? 我有现金1000万，我负债1200，所以请问你是真的价值1000万吗？没有嘛？你还到1000万现金，负债1200万，整个看起来你公司不止没有价值，还欠人家200万。所以我们看 true value，we see the true value always is net amount。有人告诉你他有法拉利，你不要开心太早，你要先问他你车贷多少。法拉利1500万，车贷450万，它其实只有50万的价值而已。Okay，any questions? Then second method. So second method, still the difference is we use cost of equipment decrease. Okay, so how to do it? No problem, right? Straight line methods. So 2 million for 5 years, each year $400,000. Then we use the grant from the government, make our cost of equipment decrease. Same methods, okay? Matching principle, we use the same methods. So we use straight line method. 500,000 minus residual value 0 divided by 5 years. So each year your depreciation expense decrease $100,000. Okay? Any questions? So that's how we got the result for our second method. No problem? So depreciation expense, when we report the situation on our financial statements, okay? So what's your depreciation expense? Here, $400,000, right? But here, decrease $100,000. So totally, you have depreciation expense only $300,000. Okay? So when we report on financial statements, you will have depreciation expense only $300,000. Did you find out? Here, make your net income same result as your first method. Okay? So that's why either one, method two, it doesn't matter because they make your net income decrease only $3,000. How about your assets? Here, cost different. Why? Because method 2 made your cost of equipment decrease, right? So that's why your cost only 1.5 million. So your cost decrease. Why is that? Because at the beginning, $2 million, you got a government grant, $500,000 from government. So did you find out second method made your cost decrease? Also made your depreciation expense decrease, right? Because cost decrease, depreciation expense will be decreased. So $300,000 still only for 1 year. Then you got a book value 1.2. We don't have a liability. So did you find out? We have a net assets, the same as method 1. So you should have the same result for your net income for your net assets. Okay, any questions? No problem. Then take a break.